Hey, future homeowners. So you've applied for a mortgage and you've got your loan estimate. It's a bunch of numbers and terms you don't understand. Well, don't worry. We're going to break it down for you together so you can make the best decision in your dream home. All right, let's get started with the interest rate. The number, that's a big deal. And this is because it's going to affect your monthly payment and how much you'll end up paying for the home in the long run. It's If it's higher than you expected, you might want to shop around a bit or ask questions or try to negotiate. Next up, let's talk about your monthly payments. It's good to look at them. Ask yourself, can I really afford this monthly payment? Remember, buying a house is a marathon, not a sprint. So think long term. Now, what is your loan term? If it's 30-year fixed or something else, just make sure it fits your life and your mortgage plan and your financial plan. And you don't want to be tied to a mortgage that doesn't align with your future goals. Okay, so let's move on to closing costs. There are fees you'll pay and you'll end up to get your actual house at the end of the day. So you want to make sure you pay close attention to your closing costs. They'll add up quickly, so make sure you budget for them and make sure you can even know that you can negotiate a bit. So keep that in mind. Have you ever heard of prepayment penalties? Well, check to make sure your loan has them or does not have them. It's important to think about, whether you're going to pay off the home early, refinance it, sell it before the term is up. Extremely important to make sure you know if you have a prepayment penalty or not. There will be a little box on the loan estimate checked if it does have a prepayment penalty or if it doesn't. So pay close attention to that. Some loans have special features like balloon payments or adjustable rates. Make sure you know what these are and how it can affect you down the line. You just don't want any surprises down the road. And if you got your loan estimate for more than one lender, now it's time to compare. Look at the interest rates, the closing costs, and look at all the terms and pick what's best for you. Keep in mind the APR will actually show you a clear number. So you'll have a note rate and APR, and the APR will actually show you what the total cost of the loan is. So the spread between the note rate and the APR really shouldn't be too far apart. If they're drastically far apart, then you know something's going on. What we're seeing right now is we're seeing interest rates, if let's say they're artificially low and they're quoted low, but then the lender charges a lot of costs with that. Well, that may not be the right situation, depending on what we think rates are going to be doing at some point in the future. So, hey, if this feels overwhelmed, don't hesitate to reach out to get some expert advice. We're here as your mortgage planning specialist and your no excuse lender. Also, always get your real estate agent insight as well. They can always point you in the right direction. So there you have it. Your loan estimate is more than just a piece of paper. It's your guide to understanding what you're getting into with the mortgage. Take time to understand it, and you'll be one step closer to getting the keys to your dream home. So let's make it happen.